Hello there. My tax accountant has put this session together because we need to talk about something really serious. That letter from HMRC, the one that mentions the Contractual Disclosure Facility. You might be asking, what on earth is that? What does it really mean for me? And let's be honest, how do I get through this without making a bad situation a whole lot worse? Well, let's break it all down.
You know that feeling, right? That brown envelope lands on your doormat and your heart skips a beat. But what if the letter inside isn't just a simple query? What if it accuses you point blank of tax fraud? That little bit of anxiety, it just exploded into full-blown panic. This isn't some routine check. This is the start of a process that can seriously threaten your business, your home, everything. But just take a deep breath. Knowing exactly what you're up against is your best and, frankly, your only first move. So, here's our game plan. We're going to look at what HMRC actually means by fraud. Then, the massive 60-day decision you have to make. We'll walk through the disclosure process step by step. We'll get into the numbers, what this could all cost. And then, and you really need to hear this part, we'll show you how HMRC finds out everything. And finally, how to get through it all safely.
Okay, let's jump straight in. First things first, this letter isn't a random guess. It's not a fishing expedition. It means HMRC already has information, maybe from a bank, maybe from a tip-off, that has led them to actively suspect you of deliberate tax fraud. Now, fraud is a big, scary word, so let's be crystal clear on what it means in their book.
It all comes down to one simple but crucial word: deliberate. This isn't about making an honest mistake on your tax return. It's not about being a bit rubbish at bookkeeping. HMRC is saying they believe you knew you owed more tax, and you chose not to pay it. That is the line in the sand. On one side, you have carelessness, a simple mistake. On the other, you have what they see as a criminal act.
So when HMRC thinks they found fraud, they've got two options. They could go straight for a criminal investigation, police at the door, the whole thing, or they can offer a civil way out first. This letter, the one under what they call Code of Practice 9, or COP 9, is that second option. Think of it like this. They're about to kick your door down, but first they knock and offer you the key. They're offering you one chance to open the door yourself and sort this out without a criminal record at the end of it. It's a one-time deal.
And here's where the pressure really cranks up. The moment that letter arrives, a clock starts ticking. Loudly. This isn't a friendly suggestion, it's a hard deadline. You've got a tiny window to make a decision that will literally affect the rest of your life. You can't afford to get this wrong.
60. That's it, 60 days. And let's be clear, that's 60 calendar days. That includes weekends, it includes bank holidays, every single day counts. And that deadline is pretty much set in stone. In just 2 months, you have to deal with the shock, get expert advice, and make the biggest financial decision of your entire life. It is an insane amount of pressure. So, you're at a crossroads. There are two paths, and they lead to very different places. Path 1. You accept the offer. You sign a contract with HMRC saying, yes, I deliberately underpaid my tax and I will tell you everything. In return, HMRC promises not to criminally prosecute you for what you disclose. Path 2, you reject it, or you just ignore it and hope it goes away. This means you're officially denying any deliberate wrongdoing. And the result? HMRC will almost certainly launch their own investigation, which can, and often does, become criminal. And that rejection, it becomes the first piece of evidence they use against you. Look, don't just take my word for it. This is straight from the horse's mouth. Gov.uk puts it in black and white. Accepting the offer is, and I quote, the only way to guarantee they won't pursue a criminal investigation. I'm going to say that again because it's so important. It's the only way. That guarantee is the most valuable thing on the table.
Right. So let's say you've made the smart choice. You've decided to cooperate. Now what happens? The whole thing can feel like climbing a mountain, I know. But it's actually a clear, structured process. Let's walk through it together so there are no surprises. It basically happens in 4 main stages. First is what's called the outline disclosure. That's your opening move. Next comes the heavy lifting, the detailed report, where you dig into all the numbers. After that, you've got the formal disclosure, where you sign on the dotted line. And it all ends with the final settlement, where you agree on the final bill and pay up. Okay, so that first job, the outline disclosure, has to be done within those first 60 days. This isn't the full story just yet, with every single penny accounted for. It's your initial admission. So for example, a freelance web developer in London might write something like, for the past 5 years, I didn't declare cash payments I received for side jobs. You're telling them what you did, how you did it, and for how long.
Getting this part right is a real balancing act.
And here's a little pro tip for you, and trust me, this one is a game changer. As soon as you possibly can, make a payment on account to HMRC. Why? Two massive reasons. First, interest is racking up on that old tax debt every single day. Paying something now stops that clock. Second, it's a huge signal to the tax inspector. It says, I'm serious about sorting this out. That one move can make the entire rest of the process so much smoother.
Okay, let's get to the question that's probably been on your mind from the start. What's the damage? What is this actually going to cost me? Because let's be real, it's never just about the tax you didn't pay. That's only where the bill begins. Your final bill is made up of 3 parts. First, there's the original tax you should have paid. No surprise there. Second, there's the interest on that tax, which has been quietly growing for years. And third, the really painful part, the penalties. This is the punishment, calculated as a percentage of the unpaid tax, for deliberately getting it wrong. Now stay with me, because this is where you can save yourself a serious amount of money. If you cooperate fully, give them everything they ask for, on time, you're looking at a penalty of around 20 to 30%. But if you start dragging your heels, being difficult, that penalty can easily double. And this is a big one. If any of this involves money held offshore, the penalties can go through the roof, all the way up to 200%. The message is pretty clear, right? Honesty really is the best and cheapest policy here.
So at this point, you're probably wondering 2 things. How did they catch me in the first place? And maybe, just maybe, is there a tiny bit I can still keep to myself? Well, this next bit is going to explain why trying to hide anything these days is a really, really bad idea. Let me introduce you to HMRC's secret weapon. It's a supercomputer called Connect. And this isn't just some big spreadsheet. It's a hugely powerful system designed for one single purpose: to sift through billions of bits of information and find people whose tax returns don't match up with their lifestyles.
And when I say billions, I mean it. Connect crunches its way through over 15 billion pieces of data every single year. That's just a staggering number. It's constantly looking, constantly comparing, hunting for just one thing, a red flag that shows what you're spending doesn't match what you're earning.
So what's it looking at? Pretty much everything. It sees your UK bank accounts, your credit card spending, property records, even your flight details. Thanks to a global agreement, it now gets data from banks in over 100 other countries, so hiding money offshore is basically impossible. It even looks at your public social media profiles. So if you're declaring an income of 20 grand a year, but posting photos from your new speedboat on Instagram, yeah, Connect is going to notice that.
Okay, so we've covered how serious this is, that terrifying 60-day clock, the steps you have to take, and how HMRC's computer sees everything. It's a lot, I know, which brings us to the final, most important point: how you get through this in one piece. And you know, this piece of advice is so important that it actually comes from HMRC themselves. Right there in their own official guide, they say they strongly advise you get professional help. Why would they say that? Because they know how complex this is. They know the stakes are incredibly high. This whole process is a minefield, and trying to walk through it alone is just asking for trouble.
And that's exactly where a specialist firm like My Tax Accountant comes in. You need a guide who's walked this path before. We can help you put together your disclosure, make sure you never miss a deadline, deal with the investigator on your behalf, and, this is the big one, negotiate the lowest possible penalties. It's about having an expert in your corner when you need it most.
Look, that letter forces you to make a huge choice. The most important thing is that you make it with the right supports. If this is something you're dealing with, or if you have any other tax worries at all, please get some confidential expert advice. You can call or WhatsApp My Tax Accountant on 07854 255 375 or drop an email to info@mytaxaccountant.co.uk. The details are on the screen. And for more straightforward advice like this, do make sure you subscribe to the YouTube channel. Thanks for watching.